This video is for educational purposes only and should not be considered financial advice. The TDI indicator with ICT Concepts. In this video, we will be covering how to use the TDI indicator with ICT Concepts. The TDI indicator. The TDI indicator stands for Trader Dynamic Index and was developed by Dean Malone to help him filter out bad trades that did not have trader sentiment of the overall market. The TDI indicator is made up of the following measurements: the RSI line or price line, which is the relative strength index, the Bollinger Bands, the baseline, and the signal line. The Bollinger Bands measure the volatility in the market. The RSI line measures the strength of a trend. The baseline is a moving average of the RSI, and the signal line is the signal to enter a trade once the RS line crosses it. The TDI indicator with ICT Concepts. If we add ICT Concepts to this logic, we can use the TDI indicator to find the best times and best opportunities to trade with ICT entries. One of the most effective ICT concepts that we have found are mitigation blocks. These are characterized by a high, a low, and a higher high for a bearish mitigation block, and a low, a high, and a lower low for a bullish mitigation block. Let's look at how we can use mitigation blocks with the TDI indicator to get fantastic entries. First, we have to look at which TDI indicator to use on TradingView. Use the one that says System Alpha, Trader's Dynamic Index. Next, our settings are going to be 14 for the RSI length, 32 for the volatility band, which is the Bollinger Bands, and the rest will be default when you use this indicator. We will also have an RSI oversold level of 30 and an RSI overbought level of 70. We also want to deselect bars and colors because that can confuse you when you're looking for your mitigation blocks. If we look at the TDI indicator, we can see during these consolidation times, the volatility or Bollinger Bands were in contraction. And then when price moved away from the consolidation in a big trend, you can see the Bollinger Bands expanding. We are looking on an hourly chart, so you definitely want to move to a lower time frame for your entries. But using this hourly chart, we can stay out of big consolidation moments by using this volatility band or Bollinger Band. Now we've drawn out the bearish mitigation block, where you see we have a high, a low, and a higher high, and that creates the mitigation block. Once price crosses that and comes back to it, that is an ICT entry. If we want to use the TDI indicator to help us with our entries, we can look down here and see when price crossed down below the break of structure. We also see on the TDI that the RSI line crosses the signal line. The signal line is red, the RSI line is green, and our baseline is orange. You could enter the trade here, or you can wait for price to retrace back up to the mitigation block, and you can take your entry right there with a stop loss above the beginning of the move. We put our entry at this move here right after price crossed the 50 level of the RSI, and you definitely get a 2-to-1 for your trade. In this same trade, the reason why our take profit is down here is because there's liquidity resting below these equal lows. But you also would want to wait for price to retrace to enter because you see another bullish mitigation block right here. And then once price touched that, it reversed and then went back into this bearish mitigation block and then continued to the downside to take out the liquidity behind these equal lows. And afterwards, price creates another bullish mitigation block. And as you see, it does not touch it. So at some point, price is coming back to this area. Now, one thing also to note, which also helps you as an ICT trader, is that we have broken structure by price closing below these equal lows. Sometimes price will just wick below the equal lows and then come right back in. That's a sign that price is moving higher. But since we close below these equal lows, we can look for price to move to the downside. So we won't be looking for a trade off of this bullish mitigation block. That's one thing you want to pay attention to. ICT's concepts really help you in knowing what the market direction is. And we can use this TDI indicator to help us with our entry criteria. So as we can see how price moved from taking those equal lows, it came all the way back again to this bearish mitigation block. It created more structure, and then it broke that structure again, breaking a trend line, coming back to this bearish mitigation block. And it creates structure above this mitigation area and then takes that liquidity. Now, if we want to use the TDI indicator for our entry, we can see how structure was taken. And we were looking during this New York trading session, during our red area and our yellow area, how price actually goes above to take liquidity. Now, you can enter once the TDI gives you a signal, which happens here. The price line crosses below the signal line, and that is where we put our entry. However, if we want to be complete in our ICT concepts, we will wait until the afternoon New York session, which is during the 2 to 3 o'clock hour. That's where price takes liquidity, and you can place your entry up here with your stop loss above this swing high. Now, we see that price does not really start making a move to the downside until after the trading hours. In this black space here, this is during the closing of trading at 4 o'clock. And we have Asia and then the London Open, and price has already moved down. However, it does come back up and give you another opportunity during the New York session in red, and it gives you another opportunity to get involved. But for this trade, we see that price went below our mitigation block, and we could have entered here when price crossed the signal line. And as you see, we have another mitigation block where we see a high, a low, a higher high, and then price goes below it, comes back up, mitigates during the New York session, and once we get across of the signal line, that is where we take an entry. Both of these are 2 to 1, and we already saw in our previous analysis that we are looking at bearish conditions because we had a big break of structure on the 1 hour chart. As we continue, we see that price moves to the downside and creates another bearish mitigation block. It taps it right here. That could have been an entry during the afternoon session when price closed below the signal line between 2 and 3 o'clock. And then we see price creates a big order block, and we can draw out the 50% level of that order block. Price comes back up, closes above this break of structure, and then retraces back to that 50% of the order block. This gives you a clue that price is reversing. Now we're going to be looking for buy trade. So any of these bearish mitigation blocks, we're not going to pay attention to, such as this one here. You do not get a big move off of it. And this one that we had pointed out that we'd already tapped into, we touch it again. Yes, you get a nice strong move during the New York session back to the 50% of the order block, but you want to start looking for buy trades. This creates a mitigation block, which happens here. This move up and down, we have a low, a high, and a lower low. We draw our line out from the beginning of the lower low. That is our bullish mitigation block. Price closes above it, comes back and retests it, and that is our entry. But we also look at the TDI to make sure that we are above that signal line. The price line actually crossed the signal line back here. However, we did not have the touch of the mitigation block. So that's where you want to wait for your entry. Now, if you want to be strict in your rules and wait for the mitigation block to be touched, and then also the price line to cross the signal line, your entry would occur here. You have this retrace, and then price crosses the signal line again, and you still get a 2-to-1 trade. If we look at this overall sequence, we can see how price creates a move to the downside and then a move to the upside. And we're using mitigation blocks as our entry criteria, and also TDI crossovers of the price line over the signal line. This last example is a bullish example where price clears this swing high and then comes right back to it. And this is a mitigation block. We have a low, a high, and a lower low. This mitigation block is tapped into, and we also look on the TDI and we see a crossover of the signal line. We can take an entry, and then price moves to the upside. And again, we can feel pretty confident that we'll get a nice large move because we have a lot of volatility with the volatility bands. They're wide over here, and over here they're small. So we're looking at larger volatility, so we can expect larger moves. To recap, the TDI indicator is amazingly effective at keeping us out of consolidation times. This is very helpful because those are the times traders lose most of their money. It is also a very accurate entry confirmation tool when used with ICT Concepts. Test the indicator for yourself and let us know in the comments how well you think the TDI indicator performs with ICT Concepts. And we want to say special thanks to @MoAtlas for suggesting this video. If you found this video helpful, please like and subscribe for more videos like these. Also, please leave a comment if you have any questions or if you have any other video suggestions. Thank you for watching.